Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest, Chairman and CEO Corrado DeGasperis of Comstock Inc., ticker symbol LODE. Comstock is accelerating the commercialization of decarbonization, delivering solutions to overcome the constraints that stand between the industrial sector and a profitable, sustainable relationship with Earth's resources. Corrado is a dynamic individual, and most certainly Comstock is an impact company, but it is a very complex story. And I think it's important for you to get to know Corrado. And that's why we are going to do this interview in a four-part series. The first part is introducing Corrado DeGasperis to you. I think we can all learn a lot from Corrado. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey, everybody, Tim from Alpha Wolf Capital coming at you with a brand new story. I'm actually a few weeks deep into it. It's actually probably more than that. It's a fascinating story, and that's why it's going to be a four-part series, which is unusual, right? Normally it's a 1 hour, but this is it's such an interesting story, and this gentleman that has decided to come on is got such an incredible background that I think it's really, really important to highlight that and his experience. And this is a fascinating company that's got more than one segment to it, and it's a little bit complex, and that's why we're going to do a four-part series. So,
Awesome.
Corrado DeGasperis.
Good. Yes. Hello.
So, Corrado and I have had literally several hours worth of conversations, right?
Good ones. Yeah, very good conversations.
I mean, awesome guy. I don't want to steal any of your thunder because I want you to go ahead and introduce yourself, and you can give us a highlight or a background on what exactly Comstock does. But before we get there, just give everybody a little bit of background on you.
Sure. No, thanks for that. No, our conversations have really been remarkable. I wouldn't say that lightly. We've had some really incredible aligning, right, discussions. But for me, it's kind of weird, right? Someone said the other day, like, 1985 is going to be, 40 years ago. I'm pushing 40 years, in industry. And I was fortunate enough to start my career at KPMG in the manufacturing and distribution sector. So that meant I was lucky enough to have clients like Union Carbide and General Electric and really those kind of major multinational, industrial, innovation-based, material science-based companies. And then somewhat of an added bonus that, the late 80s and the early 90s were very transactional. The leverage buyouts, exploded. We did a huge leverage buyout of Playtex from Beatrice, breaking the company into three different pieces. We had the entire deconstruction of Union Carbide, spinning out the industrial gas business, selling, first joint venturing the carbon graphite business, then doing a leverage buyout with the Blackstone Group, then taking it public. Honestly, I was in my 20s thinking, I can't believe they're paying me to do this. It was just extraordinary, and that was the time where, when you like what you're doing, when it's fascinating in terms of, seeing the insides of a company, the transactions. We literally spun Praxair out of Union Carbide. We were right there. I was leading the audit slash financial side, of that spin out. To get to see those things from the inside out was remarkable and unlocking a tremendous amount of value. Carbide was depressed because of the Bhopal incident, and we were unlocking value by either, selling first brands, selling specialty chemicals, joint venturing carbon, spinning out industrial gases, so that was a huge part of my background. And I didn't even think about it, honestly. Like, it was a decade of just speed. Everything was just moving so fast. And we were there. We were there right in the middle of it. I think one of the things I like the most about it, unlike most of my peers, where I could have just, sat in some corporate office on Park Avenue or in, Greenwich or Fairfield, Connecticut, where these, or Danbury, where these companies were headquartered, but I never really did that. I would always go right down into Clarksburg, West Virginia, Parma, Ohio, Clarksville, Tennessee, where the plants were. So seeing these huge industrial processes, watching rail cars come in, dumping, tons of petroleum coke, and watching the company, form it, graphitize it, and create these electrodes and cathodes for metal melting. And I was sitting there in awe thinking, this is the backbone of America. This is where real things get done. And frankly, I fell in love with it. I absolutely fell in love with it. Um, and I made partner like very quickly. Like in my 10th year, they called me in the office, and they never saw me, by the way. I never went to the KPMG offices. I spent more of my time, in the offices at GE or Union Carbide than I did in my own office, because I was just out in the field with the clients, and it was all industrial. It was all heavy industrial. You go in and you watch a jet engine being tested inside, from behind a glass, sound. It's a soundproof wall, but you can hear
Right.
it.
Right.
It's screaming. Um, those are remarkable things, right, on the forefront of innovation. So I made partner. They called me in to tell me. I was kind of surprised because I think that year, it was 1998, the average service life of the partner group was like 14.7 years. And I was like, uh, not even to 11 yet. It was like 10 and a half or something. I was surprised. And then almost at the exact same time, I got a call from the former chairman of Union Carbide telling me that this carbon graphite business that we had joint ventured with Mitsubishi, then did a leverage buyout, Carbide and Mitsubishi being the stakeholders, with the Blackstone Group, then doing an IPO and it becoming a standalone public company. This company got in trouble. They were indicted for a price fixing conspiracy, and that it was a mess, and that the company was insolvent. It wasn't going to make it, and they were hiring a new CEO to try to save it. Would I consider joining? And I was like, wow, that sounds pretty dramatic. I'm not sure. And they said, well, please, would you at least come and meet with the CEO? It's confidential because it's a public company, and we haven't announced his starting yet. And I said, out of professional respect, almost out of an odd feeling of dual loyalty, right? I worked for KPMG for a decade, but I also had Union Carbide as one of my clients for almost 6 years, more than half the time. I said I would do that, and I was trying the whole time to think about how do I tactfully decline this. And the CEO wasn't about sugarcoating. I mean, he was like, have largest criminal fines in the history of the world. Department of Justice, EU, derivative lawsuit from every shareholder, class action lawsuit from every customer, credit lines frozen. And I was like, my God, it's insolvent by any measure. It's more than insolvent. And this is like violently going down. And he said, exactly. And it's just you and I, and we need to start on Monday. And this was like Thursday. And I said, yeah, I'll do it. He said, what? And I said, yeah, I'll do it. Let's go. And he said, don't you don't you want to know how much we're going to pay you? And I was like, yeah, Gil, how much are you going to pay me? I should have asked that question first, I guess. No, the challenge, Tim, the challenge was so incredible. I was barely 30 years old, 31 years old. The challenge was so monumental. And at that time, like Enron was going down, WorldCom was going down. They happened within the next couple of years, okay, of that, right? All in that first 2 to 3 years, major things were happening in corporate worlds. We were right up there with them. Like I would think the graph, the name of the company is Graph Tech. It wasn't Graph Tech when we joined. It was UCAR Carbon Company Inc., which was this, spin out of Union Carbide, the carbon and graphite division of Union Carbide, if you will. We changed the name to Graph Tech, right? New York Stock Exchange listed. I recommended it because one of our subsidiaries, our natural graphite sub, had taken that name, Graph Tech, and I said, wait a minute, it's really where the company's going, right? It's about carbon graphite technology. It's about thermal management. It's about electrification. Like we're the technology company, not our subsidiary. And so we pretty much absconded their idea and made it the corporate name. But day one, we're meeting with bankruptcy attorneys. Day two, we're meeting with the workout groups of the banks that those guys wear brass knuckles. I was like, my God, Credit Suisse, JP Morgan, Chase, this was not fun. Day one and day two, I'm not exaggerating. That's not theoretically day one. Day one, first meeting. Day two, second, meeting. And we were literally on a 13-week, so cash flow, sources and uses every day for 13 weeks, continuously rolling. If we didn't have that visibility in front of us, I was the CFO, we wouldn't have made it through the second week. So I don't know, education by fire. I don't think I was ever described as a mild-mannered accountant, okay? But whatever I was going in is not what came out.
Right.
It was global operations by fire. It was, daily cash management by fire. It was working capital management by fire. It was restructuring, reorganization by fire. And then we're battling, you know, the customer base is pissed at us. Wall Street is pissed at us. The employees are, you know, distraught. Are
Right.
the average service life of this company, the average service life of the employees of this company was like 36.2 years. The average. This was a 120-year-old company. You don't find companies like that, right? So long story short, 2.5 years of major restructuring and then recapitalization, 3 years, let's call it. 3 years of operational excellence. I mean, turning the entire system into a system. One goal, one measurement, one goal, one measurement process, one scheduling process. We literally Bill, and advanced planning and scheduling um, uh, capacity in Switzerland, and we schedule all our plants from one place. You know, one way to schedule, one way to process, one throughput-based measurement system, one goal. And we went from 175,000 tons a year to 250,000 tons a year with no capital requirement. In fact, we reduced working capital permanently by 80 million. At that point in year 5 and 6, we knew we had saved the company and we were flying. The last 3 years, we filed over 700 patents and we won an R&D 100 award 5 years in a row, meaning we introduced a brand new product into the market. It was adopted, accepted, and had some kind of transformative or revolutionary impact. And we got recognized for it 5 years in a row. You know, so that I don't think that there's any turnarounds, restructurings, transformations that stand up to that. I honestly don't think so. Didn't do it on my own, right? There was a company had over 4,000 people in it, and we had a gun to our heads before day one. And if we didn't hit the ground running day one, we wouldn't have made it through day 10. As it's not an exaggeration. You know, for 2 years in a row, walking into the building and having to take deep breath before you walk in, like you're going onto a field to play, you know, the end game every day for 2 years. You know,
So
you're forged from a different fire. You know,
would you, as you look back on it today,
yeah,
do you have any regrets of taking that?
no, absolutely not. It completely, well, there's two sides to that. It complete, you know, and here's the irony. I thought the one thing I loved about KPMG, I was never comfortable in an accountant's skin, okay? I loved industrial manufacturing. I loved these businesses and I loved helping them achieve their goals. That was joy. I learned so much so fast. You know, I mean, literally in the first 3 or 4 years there, I had done, you know, leverage buyout, Beatrice to Playtex, broke the company up, broke Carbide up. I mean, it was just who gets that kind of experience so fast. You know, my ironically, my fear of leaving KPMG was that my learning curve was going to slow down. And it's like so naive, right? Because, you know, despite all of the activities that I was supportive of, helpful about, in the periphery of. That's not the same thing as being in it. That's not the same as being the leader. That's not the same as being the transformer or the decision maker. You are a mild-mannered accountant, right? Like you know, you think that you're in the middle of all this. You know, Blackstone talked to us twice, right? You know, in the entire LBO transaction because they were trying to position EBITDA growth and they wanted to make sure that there was a gap scrub, you know, before we, you know, these are nonsenses compared to like actually building and running global businesses. So my learning curve went from what I thought was incredible to the roof, right? And it never stopped. It literally never stopped. You know, I mean, the sophistication of corporate finance, doing a $500 million bond placement, you know, interest rate swaps. I mean, the sophistication of what we were doing was top tier, you know, and that was not what I spent a lot of time thinking about. We were restructuring plants, we were realigning schedules, we were building global supply chains, both for a very mature business in the steel and aluminum. We had a joint venture with Pechiney, who then was acquired by Alcan, who's then acquired by Alcoa. So you're talking to the top steel producers in the world and the top aluminum producers in the world. That's my background. I don't know that people understand that, right? That I come from a background of metals, global industrial metal supply chain that was fueled by oil and gas. We bought petroleum coke from the largest oil and gas companies, ConocoPhillips, right, in the world, all over the world. Sasol in South Africa, ConocoPhillips out of Texas, right? We're buying petroleum coke from the oil and gas industry. Their byproduct became our core product. Then we're selling it to the largest steel makers in the world, all through China, everywhere. The largest aluminum makers in the world. Pechiney was our joint venture partner in France. Then it was Alcan. Then it was Alcoa. So I come from oil and gas and metals, and we come. People are going to bring it back to Comstock. Is it luck? That we ended up where we are. It wasn't luck. It was playing to our competencies, playing to what we understood about global supply chains, energy, oil and gas, metals, electrification. GrafTech was one of the leading electrification companies in the world, way, way before electrification was cool. Making electrodes and cathodes and anodes way before electrification was cool. We were the largest renewable supply chain in the world, taking 100% of the petroleum coke, converting 1 ton of petroleum coke into 1 ton of synthetic graphite, and that graphite electrode is fully consumed in what? The recycling of scrap steel in an electric arc furnace. We enabled the entire electric arc furnace industry, by the way, to be created. The only way the electric arc furnace industry could operate, it only needs 3 things to operate: electricity, scrap steel, and graphite electrode. It's the only 3 things that they need. Without the graphite electrode, there's no electric steel industry. Full stop. Not an opinion, fact. Okay. Comstock Fuels has the graphite electrode for enabling an entirely new renewable fuel industry. It's the exact same thing. The little company in between the giants is enabling the entire solution. Same people. You have oil and gas on one side, but in this case, you have oil and gas on the other. You have waste carbon on one side, and you have oil and gas on the other. Petroleum coke is waste carbon. Woody biomass is waste carbon. How do you utilize that carbon to a productive end that it gets fully recycled and reused? That's what we're talking about. It's not luck.
So you told me that the first time we met, you had mentioned that you did a TED talk, which I will have a clip of that. I will have the link of that TED talk in the introduction of this series. But you talked about something that I have been kind of focused on more recently, and you and I we just really connected on a lot of different levels. Yeah, I mean, as soon as we got done with our first introduction, the next thing I did was went and watched that TED talk. And you want to just give
Yeah.
people
So I'll connect. It's a perfect segue, actually. It's a wonderful question. Like, how did we do what we did at GrafTech? So when we came in, we restructured in the most relentless way. We draw the line at relentless. We're not ruthless. Okay. Relentless. Like, we will not give up until this is fixed. The first 3 years were very conventional: cost reduction, plant shutdowns, right? Negotiations with unions. I mean, these things are tough. But when you have no choice, you are literally insolvent if you don't fix these things. You get it done. We got it done. Yeah, I guess companies go bankrupt. We did not go bankrupt. We got it done. We saved the company. I went into the CEO and I said, wow, same guy, the guy that hired me, right? Gil Playford. I said, wow. I said, Gil, you're a rock star, man. Like, you've taken a dozen decisions, that most CEOs probably don't take 3 or 4 of those in their careers. Just and so decisive, so fast, so well executed. Um, I guess why I'm here is to tell you that we're still not going to make it. I told them, I guess they were necessary, but they're not sufficient. We're still losing money. We're now smaller. We've downsized. We've cut costs, but we're not making money and we're running full. By the way, the steel industry had its worst years in 99 and 2001. If you look back at that 3-year period, almost every US steel company filed for bankruptcy or restructured. So we were taking one step forward, two steps back because we're not going to make it. He said, well, what do you think? And I said, well, some of the guys have been talking about a different method of scheduling our plants, a different method of synchronizing how we operate and how we measure the facilities. And he said, well, what do you think? I said, well, it sounds incredibly logical. I don't know that I understand it, but basically they're saying the system can only move as fast as the slowest part. And if we don't focus and subordinate to the slowest part, and we haven't been, then we're losing capacity. Said differently, if we could maximize the utilization of the slowest part, then we could maximize and massively increase our throughput, accelerate the speed at which we're generating throughput, meaning graphite, meaning cash. And he says, I don't understand. Like, I thought we were running full. That's what our operations people tell us, that we're running full. But these guys are making a compelling argument that, we're measuring it wrong. And so that's wrong. We're not running full. And so I honestly did not know what the hell they were saying. Corrado, if we shorten the cycle time here, we can go faster. Okay. What does that mean? Well, that means we'll get more throughput. How? It's like that kind of conversation. So I immersed myself in it, and I had a 3-team congregation. We had our South African team, our Clarksville, Tennessee team, and our Mexican team from Monterey come into Clarksville and start working on implementing a demand pull replenishment system, based on the theory of constraints, right? That the system can only move as fast as the slowest part. Slowest part is the bottleneck, is the constraint, if you will. And how do we ensure that we're not losing time, we're not losing speed, and I didn't fully understand it. But then our Italian general manager called me and said, you're on to it, but you have no idea how much capacity you're going to unlock. And I'm like, look, Julio, that's what people are telling me, but I don't understand how that's possible if we're running full. Yeah, we're not running full. It's the wrong measurement and it's the wrong schedule. So I said, well, good, because if we don't unlock that much capacity, we're going under. We're not going to make it, And the long story short is we brought on board a consultant who was an Italian physicist, who, by the way, mocks the fact that I did this TED talk, right? He thought it was cute. You know, um, you know, but he became my teacher, right? He saw enough in me to take me on as a student, and the student I became. And in the next 3 years, we unlocked so much capacity. We went from 175,000 tons to 250,000 tons, and we had a path to optimize the network to 300,000 tons. We reduced inventories from 250 million to 170 million and increased our on-time delivery without expediting anything. So the game was won right there, right? And we could have continued to grow that system, but having that big of a machine, that powerful of a machine, can be intimidating, right? Some of our management was intimidated. They didn't want to ramp up our capacity to 300. I don't think they wanted to win. And so, um, but it doesn't matter. We achieved it, right? We achieved it. And it was extraordinary. And that TED Talk was me describing the resistances and the obstacles to that significance of a transformation. Transformation is an overused word. Everyone thinks that if they do a little change project, they've transformed. Transformation means an entirely different goal, an entirely different measurement system, and a performance that is exponentially greater than the previous paradigm. You're shattering paradigms in a transformation. You're challenging every assumption that's blocking you from achieving a higher goal. So we have a methodology, we have a sophistication in how we surface conflict that's blocking us towards achieving the goal and then slaying whatever is in between us and the goal. And it's usually not a physical bottleneck. Physical bottleneck is easy to schedule. We can now do that almost with our eyes closed. Okay. But usually the obstacle, the real conflict that's blocking you is cognitive, right? You're stuck in a paradigm, right? You're stuck in a paradigm, and it's the deep paradigm. Like, humanity is regulated to Earth. 99% of humanity, I'm sorry, 99.9% of humanity believes that we're regulated to Earth. And that if there's an existential threat to the planet, we're wiped out. But there's a few people, Elon Musk being one of them, who doesn't accept that paradigm. He doesn't accept that we're regulated to Earth and is on a mission to colonize Mars.
Right.
So that's the kind of thinking we're talking about. So when we say, how do you make a silver mine sustainable? It's impossible, Corrado. It is a finite resource in the ground, hence it cannot be sustainable. You can accept that, right? Just like you can accept we're never going to get to Mars, right? Or you can say, I don't accept that. And now you're looking at recycling an almost infinite supply insofar as any measure that for us is going to transcend 40 or 50 years easily. We've already calculated that. There will be waste solar panels with silver coming out of the market. So every year we can produce 3, 4, 5 million ounces of silver, and our reserves don't deplete like the silver mine next door because they have a finite resource. We don't. We rejected the paradigm. Or an oil well that never stops giving. How do you you can greenwash, you can half-ass it, you can make it better from a carbon footprint than it was before. Is that admirable? Sure. It is surely admirable to make incremental improvements in the carbon footprint. Won't make a difference. Will never get you to the goal, but you could feel better about what you're doing. And certainly we would advocate doing things that are better, less polluting than things that are more polluting. No one's going to resist that. But that's not what we're here for. Right? We're here to shatter the paradigm. Right? Shatter it. How do you have a sustainable silver mine? How do you have a sustainable oil well? Impossible. Well, it's not impossible. You have to you need to think, right? And by the way, I'm not a molecular level atomistic modeler, right? I'm a logical planner, strategically and operationally. That means we use logic. That means we challenge assumptions. That means we prove before we move forward. But there's a lot of complexity. So be ready for all of the complexities all of the obstacles, all of the assumptions, and all of the formidable resistance that you're going to face if you want to do something meaningful. Otherwise, don't do something meaningful. Do something, you know, um, contributory, do something supportive, do something, I don't want to say not important. It's important, right? But don't step up to the bigger playing field. And if I can, I would say don't invest in something you don't understand. Don't invest in something you don't understand because we're not doing something incremental here. We're doing something unprecedented. I don't want to keep using Elon Musk as an example, but he said, I heard him say once that he gave Tesla less than 10% chance for success when they founded, when they joined the founders and funded, those early series. Well, I'll tell you right now, I wouldn't get involved in something that I concluded had less than 10% chance of success. But I would get involved in something that others would perceive have less than a 10% chance of success. But they don't, we need to plan it. We need to plan it. We need to challenge all the assumptions, and we need to ensure sufficiency. Sufficiency does not guarantee success, but the absence of sufficiency guarantees failure, right? So we ensure sufficiency of our plan. Doesn't mean we're going to succeed, but man, did the probability go up from less than 10% dramatically. So we're a little different in that regard, but we've had failures. We got involved in a mercury remediation opportunity. Why? Because we had core competency in mercury remediation from the mine site. Why? Because it was a global environmental dilemma. Why? Because it could have made a tremendous impact in let's call it small scale and artisanal mining all around the world. In the first world, mercury is illegal to use in mining. You can't do that in the United States since the early 1900s. In the third world countries, people are dying. Children are being born with abnormalities because of these mercury, small artisanal mining processes. The UN has a huge mandate to try to eradicate using mercury from these mining communities. But we had a minority interest. We didn't own the technology, but we thought we could help facilitate it. It didn't get to where we wanted it to get to. We were only 25% owners, but we structured in a way that we took all the assets and we took most of our cash back. But what was interesting is one of the people that we met in that process ended up being the person that introduced us to all the principles in the fuels business. When she saw our ethos, when she saw our methodology, she said, I need to introduce you to Kevin Chrysler. I need to introduce you to David Winsness. You must meet these people. So even in that failure, something tremendous emerged. We did the same thing with lithium-ion battery recycling. We said, look, we have metallurgical competency. We know how to deal with some of these critical metals, especially silver. We can get into this. So we got into it. We built a pilot. We invested in an adjacent technology. We didn't have control either then. We were a minority owner. People forget that probably. 2 times in a row, when we're not controlling the steering wheel of the ship goes, somewhere where we don't like it. But in this case, we also didn't like how crowded it had gotten competitively. We also didn't like how scarce the feedstocks still were. We didn't like the ridiculous volatility in the commodity prices. It was dizzying and disruptive. And so, and we didn't have sufficiency technologically. We were still struggling to eliminate laminates, plastics, and glues from the materials. Because of that, and oddly, because of our investment in some real estate, where we met Fortunato Villamagna. We reached out to Fortunato and said, "Hey, what are you up to? We recall you had some competency in eliminating laminates, plastic glues, from your business that you're currently in." And he said, "Well, I just sold that business. The technology would fully apply to battery metal recycling. But why don't we start with solar panels instead of battery metals?" I said, "Well, why solar panels? There's no one in the space. There's no one in the space at scale. The solar panels are coming out of the market faster and more furious than anyone had expected. The opposite was happening with lithium ion. They were extending the lives of the batteries, and then they were repurposing them for second lives. So again, it's not luck. When you have a determination, when you have a resolve, and then when that resolve to achieve something becomes a relentless pursuit, okay, and you have the tools, you have the thinking processes to have these breakthroughs when these problems arise, and they arise always. The world's not against you, but sometimes it feels like everyone and their mother is against you when you're trying to do something unprecedented, you know? So now we have, a metal recycling business that is fast and furious and scaling exponentially. That's a waste to metals business. We have a waste to fuels business that is commercializing, frankly, faster, broader, and more furiously than we originally planned. The system continues to extend in terms of technology partners, in terms of supply partners, in terms of offtake partners, in terms of everything. It's just growing exponentially. The opportunity is expanding exponentially before our eyes. So I credit it all, right, to having alignment on a common goal, having alignment on a methodology and an approach to achieving that goal. It's all about that. It's all about that. Should we expect that investors would understand what we're doing? Do investors understand what SpaceX is doing? Do they have any clue how they're doing it? No, but Elon Musk has established a credibility. He's late on everything that he does, by the way, but he's established a credibility that he can do things that haven't been done before.
He pushes. He
Throw in
pushes.
throw in social media and throw in, global social political, like it's extraordinary, but there is a common thing here. We focus on the only thing that matters, meaning the only thing that's blocking us from the most important, most critical, most significant thing that's blocking us from achieving the goal. Every day we go after what's the conflict that's blocking us today from achieving the goal, and we attack it. He's done this intuitively his whole career. Andreessen was talking about it the other day. He has this one thing he focuses on, or the one focusing thing. Like, that's exactly what the theory of constraints has always said to do, right? Focus on the constraint. And so the constraint is either the natural and permanent part of the system that dictates the rate at which you can perform, meaning it's the slowest part, right? So you want to measure your speed there amongst everything. Its system can only move as fast as the slowest part, or it's artificially bottlenecked because of some misdesign, because of some mismanagement. That's what we unblock every day because it's natural. Entropy is natural. We unblock those things every day. Some people would say it's exhausting. Geez, every day you come into work and you only want to deal with the number one biggest conflict, the number one biggest conflict. And that's what we do. So it'll take a while, I believe, for people to appreciate what we do and how we do it. It'll take a while. We try to be very transparent, but that's also gotten us into trouble, right? Because it's gotten me into trouble because it's translated into, over promising and under delivering. There's no objective assessment of what we've built in the last 4 years that could be considered an under deliver, right? We have more potential, we have more advanced technologies, right? We have more opportunities than we ever imagined we would have. But there's complexity, right? There's complexity. So we do have to do a better job. I have to do a better job in explaining how we do what we do and better setting expectations. People commit capital to us. We want to be transparent and communicate it. Changes occur, changes in organizations occur, changes in decision makers occur. That's a conflict. We have to resolve it, right? So we just have to be much more careful. I want to be more careful and more transparent. I'd like to explain more, right? I'd like to guide better, more often, more frequently, not the opposite, because sometimes it drives you into not wanting to say anything until you deliver it.
Mm-hmm.
Not really the right answer. The investors will understand if we explain it better. The investors will understand if we're more transparent, more deliberate, Now, assuming everybody's aligned on the same goal, you're in a wonderful place. If everybody wants to see us transform mobility and decarbonize transportation and wants to stick around for that ride, we're not going to have any issues. Right? But unless we were a private company with one investor, that's probably not going to be the scenario. Investors have very different timelines, very different time horizons. Some people would say, T+3 is long term. Don't expect me to be there at transaction closing. Some people would say 3 months is long term. Some people would say 3 years is long term, right? We don't care. We do the same thing every single day. We do the same thing every single day. We can't
I care.
back to it.
I'll tell you why I care. And this is why you and I have connected so well. What you're talking about right now is with everything that's happened in Wall Street, and I'm just going to share with everybody that when we were first introduced to have this meeting, the first meeting that we had, because the name of the company that I represented was Alpha Wolf Trading.
Right.
And Corrado did not have high expectations for that meeting. And he told me that very bluntly. And I asked why, and he explained the Alpha Wolf Trading. Now, everybody that knows me knows I'm going through a little rebranding here. And he didn't know that, but I told him. And what's very concerning to me is how broken Wall Street has become.
Yeah.
And how investing in itself is becoming a thing of the past. Because investing requires you to do your homework, requires you to have patience, and want to push for those things, those transformations, right? And those things are hard. And here's what I know for a fact. No matter how much management wants it, no matter how badly the investors want it, sometimes things take much longer than you anticipate. If you build it, then they are not going to just come. This is not the field of dreams. That's the first challenge, building it. But then it's getting people to make the change. And that's very difficult sometimes. So you have to have I appreciate you saying you've got when it feels like every single day you are going up against it and it isn't fun, but you stay in it. You stay in the fight and you keep pressing forward because at some point you're going to make it happen.
Yeah.
Right?
Yeah. I love this conversation. Let me add to it, right? First of all, we could have we could have privately funded fuels as a venture capital, play, right? Developed it through Series A, B, C. Ultimately, it could become bought out by private equity, and then maybe ultimately it could become public. Could have done the same thing with renewable metals. Could have said, hey, look, the mining industry's out of favor, gold and silver's out of favor 5, 7 years ago. You know, let's just quit on this and let's just go do something privately. So we did something a little different. You want to take a public entity and, now transparently, you're saying we're going in a different direction. We're investing in different businesses. But but you're scrutinized differently. We could have communicated certain things better, but at the end of the day, what we really need to communicate, and I think, we certainly have communicated this in writing. Like if you read the Q's and the K's, right, and you read the risk factors, you read the disclosures, it's all in there, right? But we tried to do something, and quite frankly, it gives the opportunity to a broader pool of investors to participate in something that normally you wouldn't have the opportunity to participate in. We like that. That part we like. You know, that retail investors, high net worth investors, they can participate in something that's early stage. But then you just, you really we do, you just have to, we're optimists, right? We actually enjoy, to your point, coming in and taking on the biggest challenge every day. It's energizing, it's rejuvenating, right? Solving big problems on a daily basis. And I would represent to my investors, these problems that we took on were not certain. Like they were not guaranteed to succeed. We didn't know we were going to get to 125 gasoline gallon equivalents. We were targeting 100 when we started. We didn't know we would get to 125. We didn't know we would get to 140. But what we did know is what's the theoretical maximum. So we asked that question. What is the theoretical maximum yield from a ton of waste wood? What is it? 170, 180, depends, could be 200. Okay, why are we losing that carbon? Why are we losing that carbon? How close can we practically get to the theoretical max? Now you start asking the right types of people that question: material scientists, lignocellulosic scientists. Cool things start to happen, right?
So this is what I want. I want you, because we're coming up on time. I want you to explain to everybody this.
Yeah. Yeah.
The
Yeah.
node.
So
Just
yeah, thank you. So a system can only move as fast as the slowest part. A system doesn't meet our minimum definition of a system unless it has a precise goal. Okay. Then the system is not contained to your legal entity. The system doesn't stop at the borders of your corporation. Inside, the system must be reliable to each other, right? So, R&D has to be reliable to to engineering. Engineering has to be reliable to prototyping. Prototyping has to be reliable to scaling, commercialization, capitalization, human resources, project man. All those things need to be reliable to each other. Okay, they must be reliable to each other. They're interdependent. That's what a system is, a series of interdependent steps. But then you're talking to the largest refiners in the world, renewable refiners, some of the largest feedstock companies in the world, utility companies, it doesn't matter. Well, so when you engage, you do so first transparently. You do so reliably, right? You do it in a fair way, but fair means that the needs of both sides are fully met. We don't believe in compromising. We do not believe in compromising. Positive sum, reliable, repeatable, reliable, repeatable, reliable. So what happens is you are establishing relationships with NREL. You're establishing relationships with RenFuel. You're establishing relationships with critical people in the government of Oklahoma. You're establishing relationships with technology providers, that overlap. You're establishing relationships with project developers. Every time you establish a node, if you ensure transparency, if you ensure reliability, if you ensure positive sum win-win. Now, positive sum win-win doesn't can't happen automatically. Positive sum win-win requires thinking, requires innovation. To have a positive sum, you must grow the pie. If you don't grow the pie, you're zero sum. It's me and you. Who's going to take? Who's going to win? That's a Wall Street mentality. Wall Street is the most sophisticated, shrewdest winners of win-lose. They take often, not everybody, most of them. Okay.
Yep.
You don't create anything. If you don't create anything, you don't innovate anything, it's a zero-sum game. If it's a zero-sum game, a few are going to win and most are going to lose. It's a small relative difference in IQs. Okay? Big, big, big losing, very small winners. Abundantly rich. Okay? But that's the problem. We need this to happen and this to happen. That's why capitalism as we know it is not sustainable if you're transactional only, create scarcity, thrive and are proud of the win-lose, brag about it. Okay. That's great. You won. You took from someone, you made money, you're a hero. It's not sustainable. It's not sustainable. It's just mathematically not sustainable. But if you innovate and you have a win-win and you share it fairly, now, by the way, someone might be saying, this is a little weak, sharing fairly doesn't sound like a big winner. You're missing the point, right? We're creating so much wealth that both sides go laughing all the way to the bank. And they want to keep working together forever. That's how we think. Is it idealistic? It's wickedly idealistic. And it's practically true also. We're doing it every single day. Talk to our partners. They want to work with us. They feel comfortable working with us. But then we challenge the heck out of the thinking. We challenge the heck out of the thinking. There's no free lunch, right? So it's impossible for people to understand how profound this is. So
I don't think it's impossible. What I think, because I have my own impossible visions of what the
yeah.
future can look like, right? And I do believe that there is opportunity to close the gap between the haves and the have-nots.
Thank
And
you for
this is a
saying.
perfect example of that,
Thank
right?
you for saying. Yeah, no, let me correct myself. It's very difficult based on what we've communicated today for people to understand how profound what I loved about our first two or three conversations, once we got over your name, was was your interest in this discussion. A lot of people aren't interested in it, or they don't believe in it, or they don't understand it. So we have to do a better job, right, explaining like our methodology and how our system is being built. It's very, very different.
Yeah. But it's, I like finding companies that I'm often early. I'm often early, and being early is a very difficult thing as an investor because as clear as it is to me, and I don't care what the solution is, it always takes longer than I think it should for it to become for people to get it, right?
Right.
And then it takes even longer because Wall Street plays their games, which is very strategic, and most retail investors are very emotional. So, and Wall Street knows that, so they know how to either wear you out or scare you out. Is the way Wall Street likes to function.
Yeah.
And I've seen it happen over and over and over again. It's happened to me over and over and over again, where I'm sitting in a company stock and I had conviction, or I thought I had conviction, and all this other stuff is moving, and I've been holding on this thing for 3 years, and man, I'm tired of this thing just going down. And you know what? That's it. I'm selling it, and I'm going to go get into this other stuff that's moving. And then 2 weeks later, the one that I sat on for 3 years, news would come out, and that sucker would rip. And I mean, it would rip. And then it would be like, wait a minute. I don't want to chase it. The thing was just this, 2 weeks ago. I'll wait for the pullback. Pullback never came, just
Yeah.
kept going,
Yeah.
right? I learned that lesson so many times. It was almost like they knew I was in the stock. They were waiting for me to sell so that they could then let it go, right?
It, yeah, time is unity, right? Like I think, being if as an innovator, early is the objective. We want to be first. And look, if we have something that we could legitimately do in 3 years, if we have something that we can see that we can get done in 3 years, you can bet that there's going to be a dozen people seeing the same thing, right? You have to look a little further, right? You have to do something more meaningful. People say something that, we've gotten compliments about skating to where the puck is going versus where the puck is. That's just an analogy for saying we're seeing, right, where the future needs us to be, but you got to do it sooner. You got to be there earlier. And then there's a lot of blood, sweat, and tears, right, to be there when you get there. But remember, sustainable. We're not transactional. Wall Street's transactional, God bless them, they're transactional. When you have liquidity behind you and the people on the other side don't, you're always going to win the timing game. So one thing we need to do better, right? And I think, maybe we've been a little too overconfident about our ability to fund the things that we're doing as we go. It's hurt us. Okay, our balance sheet is undercapitalized. And when you're working on a 20 to 40 million dollar opportunity or even $100 million opportunity, that's not that big of a deal. But when the $100 million opportunity becomes $100 billion opportunity and you're not properly funded, then that's a weakness. And if you're a public company, people will attack that weakness. They don't care if they're destroying, right, earth-saving technology. They don't think sustainability. They think transactional. How do I make my buck? I'm going to attack them because they're stupid and they've undercapitalized themselves, right? So we don't blame them. We blame ourselves. So our number one priority, Tim, right, is to properly fund these opportunities. The good news is, right, when you're at TRL 3, 4, and 5, good luck. right? Good luck funding those opportunities. Because unless you're private, unless you're bringing in Series B, C, and D, you're not going to do it effectively. Somehow we got through that war. With hindsight, maybe we won't do it that way again. Okay, but we got through that war. We're at 7 with metals. We have a facility that is up and running. We've proven it. We're at 6 with a number of mature steps in fuels that really looks 9 to us. It's not 9 because all those 9s have never been operated together in one way, hence, and 1 or 2 of them are 6. So if you averaged all of our 9s and our 6s, you might come out at like 8.7. That's not how the TRL ranking works. You go to the lowest number, you're 6. You need to build a facility to be 7. But our licensees who have been in the pulp and paper industry, who have been in the renewable fuel industry, right, who have been in these industries, oh, we get this. This is mature. We can do this, right? We don't need your first facility to up running. So now it's cool. We've got both going on, licensees moving forward and we're moving forward. Okay, but we need to be capitalized properly. We committed to it last summer, right? With an indicative term sheet. We didn't deliver that yet. That's on me. That's on me. But what's happened since then is a lot more capital has pooled from a lot more regions with a lot more interest. When you're doing 140 GGEs, it's good. Okay. So we're working on it, but mark my words, come hell or high water, this will be funded properly. This will be capitalized. We'll do it in the way that is in the best interest of our stakeholders and our shareholders. We will.
Beautiful thing is about it's hard to beat somebody that won't quit.
Never quit.
Never quit.
Never
Right?
quit.
That's what it comes down to.
Never quit. 2.5 years every single day, taking a deep breath and going into that building at Union Carbide for a GraphTech, right? Knowing that it could be the last day. Forged from steel, right? Forged from steel, never quitting. If any one of our team in those first 2.5 years quit, we would have failed. If anyone, think of it, 5 basketball players on a court, right? Championship game, 1 quits, you lose. Even if he didn't quit, if he dies of a heart attack, you lose, right? Right? That team needs to be able to endure. And when you're charging the hill with your leadership team and that flag's at the top, you better be willing to take the bullet for one of your teammates and go down for the good of the team to win the flag. That's the attitude.
And
And
this is
if you're not willing to do that, if you're not willing to die for that team, if you're not willing to die so that team takes the flag, you can be part of the system. You just can't be in a leadership role.
right.
You can't be in a leadership role.
And I view it like this. Everybody has their role. Everybody can't be a leader, right?
That's
That everybody can be there are some people that are just meant to be support, right? I look at it like this. We have a country where you can dream big, you can try to solve huge problems. We have lost our way on Wall Street, and I believe that we are disincentivizing people to take those risks. But I think we can get that back. I don't think all hope is lost. I think we can get that back. There was a time in this country when buying American meant something. It meant you paid more, but you also got a better quality product. There was a lot of pride, and that's been lost, I think. But I look at people like Elon Musk, and I look at what he's done, and he's risked it all. I mean, that guy literally risked everything.
over and over again. Steve
Right.
Jobs did the same thing with Apple, right? He took every penny he made at Apple and he rolled it into Pixar. He did the same thing, right? And then when Apple failed without him, he went back and restored its legacy. those things are not luck, right? There's a tenacity, they'll die for the company. They will die for the company. They will drive it to win. That's inspiring to us. I also think, look, I think you're right. Let me balance it a bit to say we still have the most efficient capital markets in the world, despite, some of this, transactional fear and greed based, activity. We still have the most innovative industry on the planet. You know, I think Israel's pretty innovative, but you just don't see anybody like leading and take the top 10 most innovative companies in the world, right? I don't know. I think they're all American, right? So maybe the markets are testing us, right? Maybe they're saying for you to deserve to bring this innovation to market, you need to survive this test. I don't know, but that's the way I think of it. When things are really shitty and really hard, I'm like, okay, the markets are testing us, God is testing us. We'll pass the test. No worries, right? We'll pass the test.
I think one of the coolest things about the day and age that we live in right now is the ability to get your message out to as many people as possible through social, right?
Yeah,
Through the internet. Now, unfortunately, I think the internet has done a lot of damage because I think it's antisocial.
yeah, it can be
Uh,
used both
and I
ways.
think it gets becomes social for the wrong reasons. I
Yeah,
think we do a lot of judging and jumping on. If we took that time though, and Reddit proved this, they proved that there is strength in numbers. If the retail investors got smarter, they could actually turn Wall Street on their head
they could.
because
As long as it's to remember, right? What is the capital flow enabling? If they're creating liquidity and they're creating, let's call it quasi-permanent capital bases, it would be extraordinary. I mean, it is extraordinary. It has proved extraordinary. Remember, in our world, even for an investor, it's ultimately going to be like this. A keen investor to us, we define that term, is an investor that understands our method of wealth creation and is keen on it. Wait, how do you generate throughput? Wait, how much throughput do you generate per hour? Wait, how sustainable is that throughput? I don't want to invest anywhere else. Okay, that's a keen investor. Now, we don't get to control all the investors. We don't have the wherewithal to educate every single investor. Some don't give a shit. They don't want to know.
right, right.
And so, but we can do better. We can do better. We must do better. Like I never come across whiny or complaining. Like you got to look in the mirror first and say, what can I do better? It doesn't matter if the counterparty is not doing the same thing, right?
I'm going to go back to the Wall Street thing. There was a time when in Wall Street initially, back in my day, was the reason companies went public was because, well, then all these companies on Wall Street would do analyst reports and they would bring that company to the public.
Right,
It's very different today. Now you
right,
can't get a report unless you do a financing through the institution. That's how you
right,
get analyst coverage.
right, right,
So, but what we are able to do today is individuals. I mean, I used to have to call my broker and ask them to mail me the prospectus on the company that I was researching,
right,
right?
right.
I had to wait 7 days to get that.
It sounds, yeah,
Now you can do everything right at your fingertips, right? And here's the thing. For those the younger generation that say they care about the environment and all these things, look, there is a way for you to, especially when you're early on companies, and Wall Street has done a very good job of teaching people that they shouldn't be messing with low price stocks because they're low price for a reason. They're garbage. there is some truth there. There are a lot of garbage companies that are low priced. There are a lot of garbage companies that are high priced right now. Okay. It's all relative.
For sure.
There are amazing companies that are low priced that I believe will change the world for a better, in a impactful, better way for humanity.
Yeah.
If they survive.
Yeah.
And that's the key.
Yeah.
Right.
But maybe proving that they can survive is a rough and tough prerequisite. I don't know. Like we'll survive. Like, because we understand that's the point when I say sufficiency. If you're an innovator, you've developed a new tech, do you understand what it takes to commercialize that to TRL7 and scale it to TRL8? Do you have a strategic plan, a future reality tree is the term we use, that is tested for sufficiency? Have you thought about capital? Have you thought about regulatory setbacks? Have you thought about pathway approvals? Have you thought about, sustainability of the feedstock? Is a 5-year contract sufficient in your mind? No, it shouldn't be. Sustainability is not, we can last for 5 years. So I think we need a higher rigor. I think we need to help some of these smaller companies, be more thorough, be more sufficient in their planning, and again, that's how we do it, right? Some of our partners are companies that had extraordinary technology or an extraordinary product ready for market, but they did not have the sufficiency, right, to get to the finish line, sustain and grow it. Now, what could we do? We could be shrewd. We could be transactional. We could exploit that and take over the company. And I'm sure some of the investors that listen to this call say, "You wuss, why didn't you do that? That would make me money." It's not sustainable is the answer, right? It's not sustainable is the answer. Their response might be, "I don't give a shit about sustainability. I just want to make money this month or this year or in the next 2 years." That's fine. Go invest in another company. Right? And NVIDIA is in its 35th year. What year is it in? It's not in its second year. Okay. So what do we do with companies like that? We highlight to them where they don't have sufficiency. So they come to us, they think that this is their valuation. We think this is their valuation. Then through education, conversation, communication, we both learn something, right? And then we agree that's the right number. If you just trash them down from where they think they are, they're not going to want to work with you because they don't understand why you're trashing them down. If you highlight where their plan has gaps and you propose to help with those gaps.
All right. Listen.
So is this conventional? No. Is it common? No. Is this what we do? Yes. And you're going to be hearing a lot of partners being added to our system that are being built like this.
So this is what I want to highlight to everybody. Now, first of all, Comstock LODE is the ticker symbol LODE, and it has had a massive move in a very short period of time. I am not chasing this story. I have been talking with Corrado. I mean, we've been talking about doing this interview for a while, but I just couldn't think of a way that I could be able to do justice for the interview, highlighting the company, explaining what his background and everything else really comprehensively in 1 hour. I just couldn't see doing it. So this is what we've decided to do. I wanted to highlight, look, I'm going to be straight up with everybody. If Corrado didn't have his background, if he hadn't already been through an incredible turnaround, let me ask you, when you took over that job,
right?
Did anybody else want it?
No way.
In carbide?
No. Wouldn't touch it with it. No one in their right mind would have touched it with a 10-foot pole.
Right.
There's no way.
So you took over.
The company was dead on arrival. And I think that this is perverse, right, Tim? I'm sorry to say it this way, but I think that's what attracted me to it, right? Is that everyone said it couldn't be done. Everyone said the Comstock could never be mined again, right?
Private equity took them over for a year, destroyed the company, and then how long did it take you to rebuild it back to where it was healthy again?
So thank you for saying that. So private equity came in and was out in less than 12 months. They borrowed $800 million, put it on the company's balance sheet. The company was debt-free for its entire existence because it was a subsidiary of Union Carbide. It went from having 10 million of annual R&D and zero interest expense to having 2 million of R&D, 1.8 to be exact, and 80 million of interest expense. Okay. I believe that it was the weight of that interest expense and the inability to dig itself out of that hole, and it was a public company, that ultimately somehow motivated the executives to fix prices. And then they all went to jail because of it, sadly, right? So they weren't bad people, they were good people put in a position to do a bad thing. And unfortunately they did do the bad thing and they paid the price for it, almost destroyed the 800 million was enough to destroy the company, put $400 million of antitrust liabilities on top of that. That's what we fixed. 1.2 billion, right? Of obligations that were hostile. I mean hostile, right? So on 700 million of revenue, not, it's not even a concept, okay? So that challenge was irresistible, right? That there was it wasn't, I'm not an idiot. It wasn't like there's this ridiculous, impossible task. Should we go do it? It was that there were a team of people that wanted to do it. That's what enticed me. I get to be part of this team that Gil Playford is building.
That is what the stock market offers everyone on a much larger scale. You can scrape your couch, you can scrape your car and come up with enough change probably to buy a share or two of this company.
Right.
Okay. And if you do that at once a week, every week, after a while, you're going to be able to have a nice little group of shares. And it doesn't take that many shares when you land a really good company to change your life. And I can't explain that any better than what I just said. It does not, this is not, Wall Street does not have to be a rich man's game. You might have to sacrifice buying $1,000 pair of Nikes that you don't need anyway, right? Or you might have to sacrifice going out to dinner at a fancy restaurant one weekend. But you can buy some pretty incredible companies at very, I would call, value prices, because people don't know what the company does and they don't understand why it matters. But if you can understand the why and really understand the company and have the patience and the foresight to push through, your life can change. Your life can change. Your kids' lives can change. Your kids' kids' lives can change. Yeah, that's what the stock market really does offer people. And it requires some work. It does. I'm not going to lie. I spend a lot of time researching a lot of companies. Do they all work out? No. But I can tell you this, the one thing I have learned, you can have a great product, you can have a great service. That always come back to the people. If you don't have great leadership, the odds are stacked against you. Yeah. And Corrado he's got a track record that speaks for itself. And this is a man that wants to transform and revolutionize an industry. Yeah. And if you can recognize that and you can grasp that, then this is one that what I call something an investment I say it like this. You buy it, you throw it in a drawer, and in 10 years, you open that drawer and you see what you got.
You,
That's an investment.
two things I want to say. One, when I first showed up on the Comstock, one of the local residents said to me, I only have one question for you, son. I only have one question for you. 10 years from now, I'm going to be here. Are you going to be here? I said yes, without even hesitating. I had only been there for like 2 months. This is my 14th year. If an investor asks me today, you're going to be there 10 years? Yes, it's not even a blink, right? And I want to just compliment what you said about, I've actually been accused of not liking retail investors. That's the most ridiculous thing I've ever heard because I actually love what you just said, right? That all people can participate in this story, even if they're just scraping some money weekly or monthly together to invest over a period of time. They can participate in something that could be generational in terms of the wealth that it's creating. I like that. That's why if I was private, then it would only be ridiculously high net worth people that are investing in us, right? So we have the ability to attract everybody, into this story. And that is a very attractive, social impact. It is a very incredible aspect of what we're trying to do. It's not always easy and it makes things harder in a lot of ways, but also better in so many more.
All right, listen, Corrado, we got a lot more to talk about. We're going to cut this one off, right? We're going to come back to part two,
Outstanding.
and then we're going to do 3 and 4.
I'm
But
looking forward to it. I'm looking forward to it. Yeah, well, we can take deeper dives into fuels, deeper dives into metals, deeper dives into how we innovate and develop tech. All that's open for, series 2, series 3, series 4 interview. I really look forward to that, Tim.
okay. All right, my friend. Hold on one second. I'm going to shut this off. Thank you for tuning in to another CEO interview here at Alpha Wolf Capital. Today we had Corrado DeGasperis, CEO of Comstock. I hope you enjoyed today's interview, and if you did, please do us a favor, give us a like, give us a share. How about smashing that subscribe button? All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.